Brian Grimes, your real estate mentor, back with another action-packed session. Today, we're going to be talking about the Trump tariffs, the federal funds freeze, and the ICE raids, how that's impacting real estate investors so far from what I'm seeing. If you're new to the channel, like, comment, subscribe, leave a comment that says I subscribe. For everyone who leaves that comment, I'll send you instant access to my free real estate training. It'll show you how to get started, even if you're starting without cash or credit, how to find properties, acquire them all across the country. You don't want to miss out on that. If you're on IG, just DM me cash flow and I'll send you instant access to that training. So, guys, I want to get straight into this. I've been kind of waiting for a little bit of time just to see how things are panning out. And now that we have more information, I want to get you guys this quick update. If you have questions, drop them in the chat section, drop them in the comment section, and we will get you locked in. If you're interested in any of our programs, we have our real estate ride along tour. That's where you spend a day with me in Philly, touring properties in all different phases of full gut rehab that we're going to turn into rental properties or flip deals. All you have to do is reach out, DM me, ride along, get tapped into that. That's Saturday, March 15th. You'll spend the whole day with me. We'll grab lunch and show you the game hands on. And then we have our Boots on the Ground program, only 2 spots open for this month, where we find, finance, rehab, tenant, and manage properties for you. Of course, if you just want to get tapped into our network, our lenders, architects, engineers, private money lenders, all of that stuff, you can tap into the Inner Circle program and we'll get you guys locked in. So, first, a little bit of housekeeping for my Philadelphia people. I've been getting this question a ton about Philadelphia Section 8 in particular. There have been some freezes. I will say this nationally. When that federal funds freeze hit, I've only seen a couple of Section 8 programs delay payments. They haven't stopped all out. I saw somebody in Texas kind of put out a notation that they were going to stop, but I don't believe that they did completely. New York delayed payments. Philadelphia dropped this announcement, Philly Section 8, on February 28th. The federal funding freeze announced by the White House Budget Office will have no effect on the Housing Choice Voucher Program. Absolutely no impact. Everybody who I'm helping with their properties or setting up through the Boots on the Ground program, everyone's gotten their check this month. Everybody got paid on the 3rd, which was a couple days ago on Monday. So, which is normal because you usually will get paid on the 1st of the month. If that falls on the weekend, you will then get paid on the earliest Monday, the earliest business day. So everybody's been paid. It has absolutely no impact. And I actually went and read the document. I won't pull it up here, but I actually read the document that called for this federal funds freeze. To me, this seems more political than anything. It seems like it was geared towards DEI and some other programs and federal funds that are going towards initiatives that are supported by those programs that Trump is clearly against, the administration is against. So it wasn't directed towards Section 8 or affordable housing. That wouldn't make logical sense. I'm not saying that that couldn't happen. I'm just saying that the probability of that happening is very low because logically it does not make sense. It doesn't help anybody. It creates public outcry. It's probably the last government fund you would want to eliminate is millions and millions of people from all different races, ethnic backgrounds to just be eliminated from affordable housing and put out in the street. That's very unlikely to happen. So with some of this stuff, you have to put yourself in the mindset of logic and probability. What's the probability that you wake up tomorrow and Section 8 is killed completely out of the country? Very unlikely. Very unlikely that you wake up in that scenario. So don't believe the hype. Understand that people are doing things politically to create public outcry to get their agendas pushed or to blockade certain things from happening. And that's what I think that this was all about. So, at least for Philadelphia, for my people, my hometown, Section 8 is great. They're still paying. And another thing on Section 8 that I'll mention, and then we'll get into the ICE raids, and then we'll start talking about these Trump tariffs. So stick around to the end. Guys, if you're already getting value, like, comment, subscribe, leave a comment that says I subscribe, share the content with somebody else who you want to get value or who has had these types of questions, who's thinking about getting into real estate, because this information could prevent somebody from getting in. And I don't think this is a time where you want to sit on the sidelines. We're going to talk about why, but prices are going to go up. Things are going to be changing in 2025. Rates are going to be going down, I think, in 2026. and it's a window of opportunity. So you don't want to sit on the sidelines for too long. So definitely share the content with somebody else who you want to get value. Um, that's enough on this. The ICE raids. So where are the ICE raids going to be most impactful? If you think about it logically, is it happening? Yes. Is the Guantanamo Bay thing happening? Yes. Independent or irregardless of how you feel about it, it is happening. I think the first plane to Guantanamo took off yesterday. So that type of stuff is happening. It is putting out a fear factor. I mean, there are going to be less people here. The construction industry is heavily dependent on immigrants, both legal and illegal, right? So when you start doing these ICE raids and putting out all this fear factor type of information and actually acting upon it, as the Trump administration, you are going to reduce the amount of people available to do this type of construction work. But that is going to hit the commercial space over the residential space. Why? Because it's very easy to go to a commercial site that is 100 to 1,000 unit building or 500 unit building and have hundreds or 1,000 plus workers there, many undocumented, and just round people up. It's very difficult to do that on individual sites on row homes in Philadelphia. Hey, we're just going to drive through Philly haphazard and start knocking on doors trying to find people who are working on like that's not going to happen. It's a it's a bit of a higher hurdle to jump through. So it's much easier to go commercial. So I would see this impact and where I've been seeing it hit is on the commercial side. If you're in the commercial real estate development space, ground up in particular, where you're on these job sites for 12 months to 18 months, you're going to get hit. It's going to have an impact on your costs. If you're a big box developer, like Lenner is a big box developer. I'm mentioning them because I'm going to mention them a little bit later. They build most of the, not most, but out of the companies that build a lot of ground up single family, multifamily residential, they are one of the top 3 or 4 players in the country. Um, they're going to get hit. They're going to feel that impact. And they're talking about how their costs are going to rise. Because this stuff is happening, costs are going to go up on new construction projects, and that's going to get passed on to the consumers, the people who are buying. What we preach in the 24/7 Cash Flow University is you want to invest in existing structure. You want to invest in residential because you avoid a lot of this drama when you do that as a strategy. And we'll talk about that as we get into the tariffs. Guys, if you have any questions, drop them in the chat section, drop them in the comment section, and we'll keep flowing. We're only going to go for about 20 minutes. So definitely get your questions out while you can before we wrap this thing up. All right, let's get into these Trump tariffs and the impact. And once again, if you're getting value, like, comment, subscribe. DM me cash flow if you want to get access to the free real estate training. It's about 18 minutes, but it will break down how I built over 300 properties in about 5 years, rental properties, how I built a portfolio, how I got started from scratch, how I've been helping people to do this, even if you're starting without cash or credit. So definitely lock into that. If you're busy, watch it on 2x speed. It's 9 minutes, but definitely get yourself in front of the information. You can also click the link in my bio on IG. I think you can do it on YouTube as well. But just reach out and DM me cash flow or leave a comment that says I subscribed on YouTube. So for the impact on real estate investors, DM me cash flow. I see somebody dropped a comment that says cash flow. Just DM me cash flow on IG. So the impact of these tariffs. These tariffs to me are the thing you want to focus on, not necessarily the federal funds freeze. I think that's all political. It's not going to impact the affordable housing space. Could be wrong, probably won't be wrong. Um, it's not going to be the ICE raids because that's going to hit commercial mostly. And most of us are not in the commercial space. Most of us don't have the capital to even get into the residential space. Most people are trying to get in without cash or credit. So that's not really where you need to focus. These Trump tariffs, you do need to focus on because the tariffs will have a direct impact across the board on material costs, not necessarily labor. So let's talk about some of these costs. And then we'll talk about the general increase you can expect to feel on a project by project basis. It's not as bad as you're anticipating. Um, so One thing you're going to get higher construction and renovation costs. Developers and flippers will pay more for materials. The specific materials are going to be your drywall, because a lot of that is coming from Canada and Mexico. So if these tariffs go into play, which they've been delayed, if you've been following, they've been delayed. Concessions have been made. Mexico sending, I think, 10,000 troops to the border, or maybe as many as 100,000, somewhere between 10 to 100,000 to the border. Canada's making concessions. Everybody's playing ball. So to some degree, maybe the tariffs are political and a way to hardball people to coming back to the table to negotiate better terms that put America in a better position. We don't know. We have to take a wait and see approach to these things. I would implore everyone to not overreact, but to just give it time. Some of these things you need to give a month or two to see how they play out. But if they do play out, if these tariffs go into place, you're going to have a bigger cost on your lumber. We're getting most of our lumber from Canada. Those prices are going to go up. Our drywall prices are going to go up. We're getting a lot of materials from China. We're getting almost all of our appliances. So your microwave, your stove, your refrigerator, a lot of that stuff is coming from China. So most of the appliances in your properties are coming from over there. A lot of your other materials, your tile, your backsplash, your um, bathroom materials, your toilets, your vanities. A lot of that stuff's coming from China too. So you're gonna get hit. You're gonna get beat over the head a little bit, but not that bad. So expect those to go up, but to a degree, a lot of these things have already increased in price since the last Trump tariffs were enacted, and they never really went back down. So they're not going to go up that much at all. You can also expect that some projects may get delayed or become less profitable due to higher overhead. So your overhead can impact you in two ways. One, it's just the cost being higher, right? They run these tariffs, the cost to buy the materials is higher. That gets passed through to you directly. It'll hit the supply shops first, and then they'll start marking themselves up once they run out of inventory, and they'll start charging you, and it's just going to hit your pocket. Two, there can be delays. So I've seen this with the last Trump tariffs. It created a supply shock on the electric material side because the expenses went up. And now you can have situations where you have backlogs for your materials, for your electric supply. So when what hit me in particular was when I was converting single family into multifamily. When you're doing that, you're upgrading your electric service. So as I'm upgrading the electric service, I need to go from 1 meter to two or a three gang meter socket. So I need a socket that can hold all of my meters. If I go to multifamily, I need more than 1 meter coming into that property. Well, the three gang and four gang meter sockets were actually backlogged about 8 months because of the supply shocks, trade wars, all these things going on. So now you're sitting in a deal that you would otherwise have finished that you literally cannot finish because the city won't make an exception for you to use the old 2 meter gangs and then a separate one to make three. You have to get the three in one, and now you're waiting 8 months for a backlog, or the suppliers who do have them are doubling or tripling the price. A lot of these things are going to happen. You have to prepare for them. This is a major reason why you should focus on existing structure properties that already have meters, that already have all these materials, because then you don't have to go out and buy them. You can do cosmetic rehabs and avoid these costs and these time delays. But do expect that. The second area where you're going to experience some pain as a real estate investor is on your interest rate, and you are going to have some financing risks. Lenders do get spooked at times. They can shut down. The capital markets shut down during COVID. That can happen. We don't really know what's going to happen in the future with all of these executive orders and the agendas. We really need to see, I was saying, about 6 months. And a lot of the lenders I've seen are also a little squeamish. So how they'll start to impact you is they'll start to try to reduce your appraised value of your properties. They'll try to influence the appraisers to give you low values so that they can issue you smaller loans than normal to limit their risk. I've seen that a lot, and you'll continue to see it over the course of time. If tariffs push inflation higher, which hypothetically they do, right? They directly increase pricing. If Trump's not able with his policies to push down energy costs, which is pretty much his plan is to reduce government spending, which they are doing. They're firing everybody, and everybody on the government end. They're almost. I mean, I've had many phone calls from people that are close to me where they've been laid off, terminated like immediately, no notice. So that stuff is happening, and spending is being reduced, which is hypothetically a good thing. It's not on a personal level a good thing when you know people who are being laid off, but reduced government spending is good for the deficit. But if you start increasing the cost of things and you're unable to reduce energy costs, which will reduce costs on pretty much everything across the board, you will cause more inflation. Higher inflation means higher interest rates. The Fed trying to push rates up to curb inflation, which they've been trying to do for the last 2 or 3 years, and that's going to make your mortgage more expensive as you're getting going in trying to get more properties or do refinances or get DSCR loans or do the BRRRR strategy or do any of these things, right? It's also going to hurt flipping when you're trying to flip houses and people are buying these properties at higher interest rates. They're going to want to pay less for them. The property's going to sell slower. So that could have a direct impact on the market. Although I still do think rates are coming down after things balance out. I'm predicting that by the time we hit June, a lot of these executive orders, a lot of the drama of the transition will be settled. People will have more certainty, and rates will start to fall much faster on the second half of this year than we're seeing right now, which is kind of stagnant to slight increase. By the time we hit 2026, that's when rates are going to plummet. And that's going to be your window. That's where everybody who's on the sideline, not getting into the game, is going to be getting left behind by the people who are in the game now, building the relationships with lenders, understanding how to rehab properties, learning the game, building their strategy, building their systems, and they're hitting 2026 with momentum. If you hit that move the correct way, you'll be able to grab 5 to 10 properties in 2026 and put them at nice interest rates, refinance the rest of your portfolio, and be kind of locked and loaded and good to go. So if you're getting in the game, you'll be good. Investors relying on leverage, hard money, bank loans, construction loans, you may feel some bit of short-term turbulence, we'll call it, a bit of a short-term squeeze, but long-term, you'll be just about fine. And now we're going to get into some of the positives because whenever a door closes, another one opens. Whenever something that you perceive as negative happens, it creates opportunity as well. So, as a real estate investor, you always want to be in the optimistic mindset. A lot of people love that about my mindset because they're like, man, I can't even shake Brian. I mean, you can come to me with anything, and I'm just going to find a solution and move forward because I already know this. I've lived it. I've been doing this for over a decade now. And I've run into situations that I thought would be crippling, would knock you out of the game, and they don't. You just keep, as long as you keep going. It's really you versus you, your mindset versus your mindset, and how you wake up every morning and attack the game. So if you bring the right approach here, you will be good to go. Um, but here are some of the positives that we have. And guys, if you're getting value, like, comment, subscribe, leave a comment that says I subscribe. For everyone who leaves that comment, I'll send you instant access to my free real estate training. It'll show you guys how to lock into this game. Somebody said, do you, I'll answer a few questions and I'll get into the positives. Do you install blinds on your rentals? Of course, you definitely want to put blinds on your properties, on your rentals, especially while they're vacant. You're showing them, I mean, you want to block everybody out. Um, I don't think we have any more questions there. If anybody has any questions, drop them into the chat section, drop them into the comment section. So, three, you're going to have a higher demand for rentals, which is going to be more profit. If prices go up, if rates go up, a lot of people are afraid of these things. Interest rates could go up because of inflation, and that's going to limit supply. That's going to make people not want to buy as much. Well, if fewer people can afford to buy homes, more will rent. More people are going to rent, which means if you are an existing landlord or you have a portfolio or you've been building rental properties, there's going to be a higher demand for rentals. So these tariffs indirectly will increase demand for rental properties. We have an affordable housing issue. We're in the midst of the biggest affordable housing crisis we've ever seen, quite frankly. The World Economic Forum is projecting that the affordable housing crisis will double. The need for affordable housing globally will double by 2030 in 5 years. So if you're in this space, you're primed to receive increased demand, increased profitability, So you have a much higher profit potential as a landlord today than almost ever. Landlords can raise their rents to offset higher property costs. So as taxes go up, as inflation happens, as these things are happening, you can increase your rents and you can put yourself in a better position. Somebody said, "Do you recommend buying property in Gaza?" Not necessarily. Like, not necessarily. I know the U.S. is thinking about that as a territory. I think that's like an off the top ropes move. I don't know what Gaza would be selling for. I would imagine it's probably not cheap. Um, and who knows? I wouldn't even know how to buy property in Gaza. That I wouldn't do. I would buy property here, and I would challenge you to say, do you own property here? I would get property here first before going out of the country, because a lot of people from out of the country want to buy U.S. real estate. So just from a supply and demand standpoint, I would buy U.S. real estate and hang on to it. Cash flowing rental properties become more valuable, benefiting buy and hold investors. So as prices go up, the cost to build new properties becomes more expensive. Your existing properties become worth more. They're going to appreciate in value, which is the next step. Inflation often drives real estate values up. I would say, I wouldn't say often, I would say always, from what I've seen. It drives up the value of your existing property. So if you have a property that you bought for 60K, put in 60K, you're in at 120, and it's worth 170 right now. If you go out 4 or 5 years, it may be worth 220, 250 from inflation, from the cost of newly constructed properties and where the market is headed. So you just want to me, always get in the game now. It's always cheaper now. The price that we build properties at today, and I'm probably building 30 houses right now. The price that we're building out at now is 30% to 35% higher than it was in 2018. It's crazy. If I could go back in time, I would have built more properties. I would have gone crazier during that time, because it's like free money. They're just giving you free money to build, and interest rates were lower. So these prices that you're building at today, they're lower than they're going to be tomorrow or next year or 10 years from now. So you always want to get in now and then appreciate over the course of time. And you will naturally appreciate, especially in this world, because things are constantly getting more expensive and the dollar's becoming worth less and less every year. You're having your money just kind of erode itself. Savvy investors can adjust their strategy, pivoting to build to rent instead of flipping. Pivoting to pivoting your strategy would be like, instead of doing full gut rehabs, I'm gonna buy properties that only need cosmetics. Go in, refresh the kitchen, refresh the bathroom. I'm not going to full reframe the house. Well, if I don't full reframe the house, I don't care what lumber prices are. They're not really going to impact me. For the people who are doing ground up construction right now, like Leonard, which is one of the big builders in America, they're projecting from the tariffs, if things go into play, because they did this projection prior to, um, the 30-day or 90-day stay with Mexico and Canada and all these different things. Um, they were projecting about $5,000 to $8,000 increase per property. To me, you can negotiate that with the seller. You can uh, get lower to the ground, go after foreclosures, go direct to seller, find off-market deals, and cut down 5 to 8K per acquisition and not really feel it. I mean, you are going to feel it on your material costs, but you don't necessarily have to feel that impact on your actual deals. So I would say 5 to 8K, it doesn't scare me on the typical single family rental property. It's not a deal killer, but it is there. But what I would do is avoid it. Find properties where you don't have to frame them. Find properties where the existing service lines are in good shape and the mechanic lines, the electric's in good shape, where you can avoid some of these expenses. If you can avoid the expenses, then you save there while other people are paying because they're not avoiding it or they can't avoid it. This is a reason why you don't necessarily want to be, which I've said before, in ground up construction. I don't necessarily want to be in ground up new construction deals as my primary source of revenue right now. I don't, because you're going to feel any hit. And your building window is 12 to 18 months from buying the property, getting all the permits done, all the groundwork done, all the site work done, and being able to get to the next level. I don't want to do that because over an 18-month period, we could be beefing with China, and then I'm getting screwed on all my materials. All of my numbers, all my projections are going up. And then people are getting hit with ice raids, and then my labor cost goes up because when it's supply and demand. If there are less people to work, they charge higher prices. Supply and demand. So I don't want to be on the back end of that equation. I want to be on the right end of that equation. So those are some things there. Who gets hit harder? This is important to keep in your mindset. And guys, I'm going to get into the difference between who's getting hit harder, real estate investors or U.S. citizens. If you've gotten value so far, um, like, comment, subscribe. Leave a comment that says I subscribed, or DM me cash flow if you're on IG. Share the content with somebody who you want to get value. If you're interested in any of our programs, Real Estate Ride Along Tour is March 15th. Just sold a couple tickets this morning. That ride along will sell out. I'm going to do way less ride alongs this year than I did last year. Last year I did about 5 or 6. This year I might do like 3, because they're very burdensome to plan, and we're just busy. We're busy building. The Boots on the Ground program is expanding, and we just don't have as much time to do those ride alongs. But if you're interested, DM me ride along. Drop a comment that says ride along on YouTube, and I'll get you tied into that. You'll spend a day with me touring properties in different phases of full gut rehab. We will take you across the whole city of Philadelphia, grab lunch together. You can pick my brain. You'll get access to our course content. You'll get access to our network, our inner circle calls. You'll get a lot of value from just coming out and putting your hands on the real estate. It will take the fear out of real estate investing for you. And of course, if you're interested in our Boots on the Ground program or our other mentorship programs, DM me Boots on the Ground. Boots on the Ground is where we find, finance, rehab, tenant, and manage the properties for you. So for those who are busy, who have some capital, they want to play around, they want to get some deals out of state. Maybe you're in California, New York, you're priced out, but you want to get deals, cheap rental properties in a top 10 city, cash flow city like Philly. You can tap into Boots on the Ground and we'll do it all for you. You own everything. It's just a fee for service model. So you own everything. Everything is in your name. You own everything. There's no funny business there. I want you guys to build wealth for you and your family. If anybody asks you, by the way, to give them cash to do deals. And there are people out there like that where they'll say, "Well, give me the 50K and I'll do the deal. I'll put your name on the deed or something." Don't do any of that nonsense. Make sure you own the property in your name or the name of your LLC that you own independently. Real estate is a team. Real estate investing and developing, it's a team sport in a sense. You need developers, contractors, architects, engineers, realtors. You need all these different people, insurance people, and just lists, long laundry list of people. But ownership is a solo sport. It's like golf or tennis. You need to own your properties by yourself. You need to be the decision maker. Do your own thing. That's like the best advice I could give you. Okay? So make sure you're doing your own thing. Do not give up your money to somebody and have them take your money and invest your money directly. If they want to facilitate a development process for you that you own, hey, we'll handle the construction piece. Hey, we'll find you the tenant. Hey, we'll do some of these things for you as leverage. Leverage is really good in real estate. Doing it yourself is overrated in real estate. This is not a TV show. You can't turn it off when you get tired. This is day in, day out, Sunday to Sunday, no breaks. Whenever the phone rings, you got to answer it. That's real estate development. So having leverage is good. Even I have a lot of leverage. People look at me, Brian does everything. He's doing all this. He's building 30. I have a big team. I'm not just running around like a lone wolf. I have a very big team, which is why I'm able to do this and provide leverage to you guys. So who gets hit harder? The reason I want to talk about this is because you need to understand the political motives behind a lot of this stuff. Who gets hit harder, a regular U.S. citizen or real estate investors from a Trump tariff standpoint? To me, it's regular U.S. citizens are going to get harder. As real estate investors, this is not a big deal to us. 5 to 8K increase in prices. Negotiate with the seller. Pass the buck, essentially. You go to the seller, look, prices are higher, development costs are higher. I'm not buying this piece of crap. I don't care what you think it costs to rehab. You haven't sold a property since 1982. You have no idea what construction costs today. Here's what it costs. Here's the rehab budget. I'm offering you 72,000. Take it or leave it. And people will take it. is the bottom line, because they know the deal and they don't want to go out and rehab their properties and keep them anyway. But the U.S. Consumer, they're getting hit. I mean, you guys see people going crazy on eggs right now. People are stealing eggs from Walmart. They're getting hit on just the groceries, gas prices, unless the Trump administration can push down the cost of energy. Rent is going up. Home prices are going to go up from this. And even here's the crazy part: home prices are going to go up from Trump tariffs and inflation. But then as they reduce rates, which Trump is trying to do, and will do ultimately, if not now, by 2026, when they can appoint a new chair of the Fed. He's going to appoint somebody who's in alignment, is the bottom line. They're going to start pushing rates down. When you push rates down, prices go up. So sitting on the sideline right now is insane. If you sit on the sidelines right now because you say, "Oh, prices are high, I'm going to wait for them to fall," prices are going way up. Prices are going to go so high, you'll never buy. You'll never get in the game. You'll never get a rental. Not unless you have extreme knowledge of creative financing, how to get in front of motivated sellers. A lot of the things that we teach in our course content are inner circles. Unless you're tapping into that level of knowledge, you'll never be able to get your hands on a good deal. You're going to be priced out of the market. All of these things are going up. A regular consumer, regular citizen has fewer ways to offset rising costs. As a real estate investor, we can just pivot. I'm just going to go cosmetic for a year. You can't do that as a regular citizen. You just get hit. And home ownership gets harder for the average citizen because prices go up, rates go up, but that means more people are going to rent. That just puts you in a better position as an investor. So, real estate investors, to me, you still win, even from a tariff situation, if you're smart enough to pivot your strategy. And if you're not locked into a strategy where you can't pivot, like ground up construction. Ground up construction, you can't avoid anything. You're just going to get hit with whatever the game throws at you, which is why, to me, it's one of the riskier strategies. Even though it's straightforward, there's a bit of risk in it that a lot of people don't talk about. So I hope that helps you to wrap your mind around all these things. A federal funds freeze, which I think is completely political and will have no impact on affordable housing. Could be wrong, probably won't be. ICE raids, not likely to impact residential real estate investors, will impact commercial, will impact, I won't even say may, will impact commercial pricing on those assets, which will be directly passed off to the consumer via higher rents and higher sales prices for new construction. Or you should watch out for your new construction properties that you guys are buying. I know there's some people out there that are like, I want to get the new construction building in Texas. Well, they're cutting so many corners on those buildings to try to keep their costs low that the properties are like, they're not worth the money. They're not worth the money. So unless you're a builder and you understand what corners they're cutting, like you get the property, there's no insulation. Not like less insulation, like none. Like they just didn't put it. So you have to really watch these guys. You can get screwed over there. But this is how you need to factor these things in. You need to understand, first and foremost, the political motivations behind this information. Who controls the news? What they're trying to get you to do? Are they trying to get you to react emotionally? You like that's their goal. They want you to get emotional so that you can get on board with their agenda. If you have full information and you're residential, you probably wouldn't care. You'd be more like me. I do care. I'm not necessarily I'm not really on board with this whole Guantanamo thing. It kind of just like freaks me out a little bit. So it's not like you're ever going to be on board with everything any administration is doing. I don't think that that's the point of an administration, for everybody to agree with them, include me included. But you need to be free thinking. You need to be able to navigate any administration, because every administration is going to give you some green and some red, some things that are negative and then some things that are positive if you can see it. And you need to be able to look for those and understand their agendas. Guys, if you got value, like, comment, subscribe, leave a comment that says I subscribe. If you have any questions, drop them in the chat section, drop them in the comment section. Um, and we will get you tapped in. Ice Thompson said, I want to join, but there's a wait list. Yeah, there's a wait list forming for boots on the ground. I had somebody interested in boots on the ground, and they're going to come out and look at the properties and do all this stuff. And I was just like, bro, We just had 3 people tap in. We don't have no spots for you. I mean, it is what it is. I can't build houses for everybody. I mean, maybe there's somebody out there who can. I can't. We're building like 30 houses right now for different boots on the ground members from all across the country, some from outside of the country. There's only so many people I can help in that capacity. That is a high capacity. So for those who are in boots on the ground, understand you have a privileged position to be in the program, and there are lots of people who want to get in that I'm holding at bay, and it's something that you shouldn't take for granted, like the boots on the ground, especially how we do it, how we have the contractors putting up capital for your deals, and there's a lot of things that we're doing within that program to protect you guys that I don't have to do and that people won't do for you out there. In fact, every time I explain it, people are like, "Whoa, this is crazy." And one of our biggest things about the boots on the ground program is people are like, "This is too good to be true. It's too good to be true." I'm just like, well, oh well. If you can't believe it, whatever. I'm not here to convince everybody either. We have more people than we can serve anyway. But if you're interested in boots on the ground, reach out, DM me boots on the ground. If you want to tap into that ride along tour, um, definitely reach out. The tickets are on sale. The pre-order tickets, that's March 15th. So pre-order tickets will be running maybe for another 2 weeks. Those are 50% discounted. It comes with course content. You get your 24/7 cash flow hoodie, just like me. I'm not sure what color we'll do, but we usually will mix up the colors. But you'll get a hoodie and course content, lifetime access, spend a day with me. And trust me, I put together the ride along tour because it was the one thing that I felt I needed as a new real estate investor. If I would have had access to me on a ride along, hey, let's spend a day with a guy who's built 400 houses in the last decade, 400 properties, full gut rehabbed. Let me spend a day with him picking his brain before I get started. Had I done that, I would have saved myself probably $1 million worth of mistakes. Literally, $1 million worth of mistakes, having had that level of access. But some people can't see it. They don't get it. They don't have any experience. Um, so it is what it is. If you're one of those people, God bless you. You'll figure it out when you get ripped off by a GC for 50K. But for those who are wise enough, come out, get educated before you invest, because this game is unforgiving. In my opinion, this game, it can absolutely crush you. You're going to pay for your education either way. That's what I'll say. A lot of people think, I'm not going to pay for education. That's ridiculous. Well, you paid 100K to go to a liberal arts school for a degree that you're not going to really use. Um, hell, I've seen people go to law school and get a 250,000 of debt, and they're not a lawyer in 2 years. You paid for that, but I'm not going to pay for my real estate education because I don't believe in that. You're gonna pay. You will pay one of two ways. You'll get mentorship or you'll get burned by a contractor until you learn. Contractor or contractors until you learn. And unfortunately, you don't learn that much by getting burned from a contractor, other than maybe I should have seen a red flag and not given them the money. That's all you learn. You don't really learn how to build houses. You don't learn how to invest. You don't learn how to find properties off market. There's really no takeaway from that, other than maybe I should have Google searched them or something. Maybe I shouldn't have given them $20,000 up front and hoped that they would show up. Maybe I shouldn't have prepaid them after they stood me up a couple of times. You'll learn that, but that lesson ain't worth that much. I could tell you that. In fact, I just told you for free. And I have videos on my YouTube channel that talk about this and will teach you how to protect yourself from this for free. But you have to learn one way or another. And you will learn in this game. This game is unforgiving. Even my story of getting burned for 40, 50K by a GC, I told it to a guy on a podcast. He said, Brian, I got burned for a 250,000. So even my 50K story is lackluster compared to some people who've been burned for more, 250,000. Actually, I know somebody who got ripped for 500,000 recently. This was a few months ago. 500,000 cash. And I was like, what? You should have called me. Should have called me. I don't know why more people don't reach out before getting into, especially a $500,000 cash. I'd reach out to me if I even had an inkling of who I was when I was getting started and I was thinking about doing something like that. I would reach out to me first. But I recommend just educating yourself. Are you doing new construction or renovations? I'm doing renovations. I'm primarily doing. It's not that I'm not working on some new construction stuff. I am. Um, But that's not where all my eggs go. All my eggs don't go in that basket. Most of my eggs, if I'm going to put them in one basket, it's going to be in the residential existing structure business because I can rehab those properties faster. There's an unlimited stock of them because most of these cities were built in 1910, 1920. They're 100 years old and they need it. And there's not enough people like me running around. Really, I'll say like us, our 100 Keys Masterclass people, our 24/7 cash flow family. There's not enough people like us running around with the knowledge. In fact, and I know this because it's like on our recent inner circle call, we had somebody tap in that she hasn't tapped into an inner circle call in a year. So I hadn't heard from her in a year. Did boot um, came in, got the course content, upgraded the boots on the ground, built 2 properties for her. She took the strategy back to Texas, did a couple deals out there, and then I hear a year later she's like, "Yeah, I did 14 deals last year." I'm like, "Damn, 14 deals? That's way more than I did, my first 12 to 24 months in the business. Way more than I did. My first year I did 1 deal. My second year I did one, maybe 2 deals. So by year 1.5, she's at like 15 properties from the knowledge, from the systems, from the structure, from getting enough information to accelerate and from following the steps. So it's fun to see people accelerating in that sense. But that's how you know there's not enough competition. There's not enough people out there because somebody brand new, never done a deal before, can learn, come in, tap in the boots on the ground, or tap in the inner circle, or do a ride along, start learning the game, and then before you know it, boom, they're knocking out 10 plus deals in a year because nobody's going to stop you. There's a lot of inventory. There's a lot of opportunity here. And by the way, she probably made, geez, I don't even know how much she made doing 12 deals. I mean, she did them right, and she was doing some cash out refinances. She probably made 100K and refinances tax free, plus keeping all those properties, rental income, appreciation, equity. She probably made like half a million, almost $1 million total in equity, tax losses, and cash flow and refinance money. But I'm just a talking head, right? Like I'm just a talking head. I mean, you guys gotta. I would say make up your own mind, but get educated. Don't go out and run in this game and get beat over the head by a contractor. It's the dumbest thing. It's so stupid. Even though it happened to me and many guys I talked to, it happened to us at a different time. It happened to us when social media was a lot less developed, where there's a lot less information out there. It's boneheaded now. It wasn't boneheaded then. I looked for mentorship. There wasn't any. There weren't really people out there a decade ago or 15 years ago. There weren't people out there with programs and things that were dedicated. You didn't have the same apps and the same technology that you do today. Today, it is truly boneheaded and stubborn and foolish. It is foolish today. Back then, it was what you had to do to learn the ropes, but you don't have to do that anymore. Just like you don't have to invest in California, you can just invest out of state. You don't have to overpay for your rental properties anymore. Not with today's technology. On average, how long is the process from joining boots on the ground to getting a house to placing a tenant? I would say you want to give yourself a good 4 to 6 months for any type of process. It's going to take you, if you're doing this the right way, and this does apply to boots on the ground as well, but if you're doing real estate the right way, it's going to take you a month until you build up your systems and your speed to get a good property. If you were starting from scratch, from zero today, take you anywhere from, I've seen people get a property in 4 days in the boots on the ground program. And I've seen people where it takes longer for them to build up momentum. But on average, we'll say like a month to get a deal. It's going to take you 3 months. This is if you know what you're doing to build a property. I explained this I believe on an inner circle call, because a lot of people come into real estate and they're like, well, Brian, you said it'd take 3 months, but it's 4 months now. And it's like, bro, this isn't, I'm not baking a cake here. Like, it's not like I put on a timer and put 20 minutes on a stove here. Like, this is, if this was a track event, this wouldn't be the 400-meter sprint. It's the 400-meter hurdles. This is you running fast as hell, as hard as you can, and hurdles appearing in front of you. This is not a game. There are inspectors that they're on a schedule, then they no show. Oh, it rained. I got sick. I'm canceling you. That pushed you back a week. There's permit delays. There's material delays, supply shocks from tariffs and different things going on. Oh, the cargo ship didn't arrive to the supplier, so they thought they would have your windows this week. Now they're going to be 3 weeks late because they got to put them on another ship. The ship don't just appear. This ain't like Captain Kirk and it gets beamed up. This stuff's got to go all the way across the water from China. So it's like things are going on. You want to give yourself on average 3 months. It could be four. And then you want to give yourself, depending on your tenanting strategy, if you're doing market tenants, you could probably tenant in 30 days or less. If you're doing Section 8, you want to give yourself a good 45 to 60 days for Section 8. So I would say 4 to 6 months to turn a property on average. Can it go faster? Absolutely. Absolutely. But we're talking about average. Can it go slower? Absolutely. Because it's real estate. It's not, once again, it's not TV. A lot of that stuff's edited, but you can solve all your problems. It's not like you're going to come to a complete halt, but you have to factor in some things. You have to be prepared. So 4 to 6 months on average, but have cash reserves, have liquidity. Don't stretch yourself thin. Be prepared for a realistic deal. Once you build up momentum, while I'm building the first house, I could be finding the second house. So there's no 30-day finding period now, is there? Because I'm building. Now there's another house online. Then there's another house online. So you can build up a pipeline of activity and have overlap and overlay within this process, which makes it feel a lot shorter. But I'm just talking about starting from scratch and getting yourself started. But understand this is 400-meter hurdles, not the 400-meter sprint. It's not. So that will keep you in the right mindset that hurdles will be thrown at you. You need to navigate them. And this is the real value of mentorship. It's not that you can't try to find the information. I mean, most of the time you can't anyway. But even if you could find the information of how to move in a straight line through a deal, there's going to be so many hurdles and roadblocks and obstacles um, that you're just not going to be able to navigate as a new person. You're not going to have the relationships. I have more importantly than me and my knowledge, my relationships. I have relationships with architects, contractors, uh, plan examiners, permit expediters, different people that can allow you to move substantially faster when you run into roadblocks. People that work for the city, for the municipal companies, for the city, for the utility companies, for the city, having them, hey, something went wrong. Can you get the lights back on, bro? Here's $500. Stuff like that, it allows you to navigate and get out of pickles, what is what we'll call it. So that can be very important. Guys, if you got value, if you're getting value, like, comment, subscribe. Leave a comment that says I subscribe. For everyone who leaves that comment, I'll send you instant access to my free real estate training. 18-minute training. A lot of people request the training. And then I'm like, yo, did you watch? They start asking me questions about real estate. I'm like, yo, did you watch the training? Oh, I'm just trying to make time. Bro, it's 18 minutes. Oh, my bad. And it's like, I should have told them it was 18 minutes first. Then they would have watched it right away. If you don't have 18 minutes for your real estate success, for your education, don't invest. Don't get into the game. You don't belong here because you're not serious. If you can't invest 18 minutes into trying to get ahead, you don't belong here. You don't belong. You spent more time watching the Kevin Samuels video from 4 years ago. You spent an hour on that one. You spent an hour on World Star. You got to put 18, 20 minutes into your real estate, bro. You got to go look at properties in the morning instead of watching nonsense. Somebody said, how do I get into the inner circle? You got to reach out, book a call. Um, I'm going to put a link into the description of this video. I was moving fast, so I didn't. If you go on my Instagram, Brian Grimes _247 CFU. If you go to my Instagram, you click the link in bio, you can watch the free training video, 18 minutes, and you can fill out an application below the video, and that'll lock you in. We'll reach out because you left some comments. We'll reach out and send you some links to the training video and everything. But you just have to fill out an application, connect with me and my team. And if you're a good fit, if the program's a good fit for you, and if you're a good fit for us, we'll open up a spot for you. within the inner circle or within the boots on the ground if you're interested. Guys, if you have any questions, drop in the chat. I'll answer these questions and then we'll call it. To buy a rental property requires down payment. I hear from mortgage brokers 10% or 5% lowest and 720 credit scores. No, that's wrong. That's all wrong. You can get and I got my first deal with like a 620. You can put down as little as 3.5% if you're buying a multifamily and you'll own or occupy for 1 year, one of the units. So you can get like a 3 or 4 family, live in one unit, rent out the others, live for free for a year, then move out, rent the whole thing in cash flow. 10% or 5% lowest. No, I mean, they're just wrong because you can do an FHA. The lowest would be 0% or 1% because there are some big box lenders who are doing that type of stuff. You can negotiate seller's assist as well. So I would just say it's all wrong. It's much lower across the board. Lower credit score. You can go down to 620, some as low as a 580. Lower down payment, as little as 3.5 or maybe 1%. And even for the rental properties, yeah, you can go pretty low. If you're doing the burst strategy, if you're buying, rehabbing, and renting it and refinancing out, you can get those construction loans. We have 100% lenders we have access to as well, which is zero down payment. I could connect you with a 100% lender right now with zero down payment. They give you 100% of the money to purchase and rehab, and you just pay the closing costs. So yeah, there's a lot out here. You're gonna hear a lot of information from people who are, I'm a broker, I'm a realtor. They don't know anything. They got a license that doesn't teach you how to be an investor. It's like going to karate school. It's like you got a brown belt. Somebody could still beat your ass. Somebody who's out, like you could get a brown belt in karate class and never really have gotten in a fight before. And some dude who's like out in the street could thug you because he's fighting. Like he has no classical training. It's like my uncle taught me how to fight in my garage when I was 6 by beating the hell out of me. So now I know how to fight. I've gotten a lot of street fights and I'm going to beat your ass. I don't care what belt you have. It's kind of like that. Like real estate investors are out fighting in this game. They're out getting battle wounds and scars and building relationships and connecting the dots and navigating. And somebody goes and gets a realtor license. They're not even close. They're not even a blip on the radar to a developer. They are leveraged to a developer. They can give you some information, but a lot of this information is just, this is why I want you guys also getting beyond the level of just information to the level of free thinking and understanding agendas and motivations behind information. So they might tell you this stuff, oh, this is the best you can get out there, so you just don't look. Best you can do is 720 because their company or whoever they're licensed through or brokered with can only do what they're saying. So they'll tell you this is the best I can do. And if I can't do it, if you can't do it with me, then it just can't get done. It's a lie. They're just trying to railroad you into their product, into their service offering. When you become more free thinking, you'll start to investigate everything they're saying and you'll be like, man, this is bullshit. And if you see one thing is off, then maybe more is off. But the 720 it's shocking. Most people don't have a 720. That's not even the average credit score. So lenders wouldn't design their credit score requirement, their minimums to be at a level where most people wouldn't qualify because they wouldn't be able to get business. They're still trying to have the average person qualify. So no, I would say I wouldn't worry about that. And the more you learn about the game, the more ways you'll learn how to get zero down or cash out refi, which I'll have some people in the boots on the ground program. One guy in particular who's been rocking the auction, he's looking at some cash out refis. I've just confirmed his real estate, his rehab budgets. And from what I'm seeing on every deal we're building for him, he will cash out refinance $30,000 to $50,000 of tax-free money and cash flow on the rent. It's going to be absolutely insane. So guys, hope that helped. I have to hop on some calls. One for somebody who's interested in boots on the ground, another for somebody who just joined boots on the ground, their onboarding call. So I got to get back to it, back in the mix. If you guys have questions for me, drop in the chat, drop in the comment section, reach out, DM me. Connect with me and my team, get access to that free training, click the links in bio, book a call, learn more. If you're motivated, if you're not, don't book a call. Don't worry about it. Um, we're extremely busy here. So when you're ready, reach out. Don't reach out if you're not ready. If you just want information, tap into the YouTube, tap into the Instagram. Lots of videos, lots of content, lots of lives, lots of info for you guys. And I don't think we'll do another live. For my inner circle people, we won't have a call tonight. I'm going to send out that email shortly. That call will get pushed to next week. And I'll see you guys on the next one. We'll probably have a Monday night live coming up this Monday. Brian Grimes, your real estate mentor. Hope this helps. Share the content with someone you want to get value. See you on the next one.